Hi, everyone. This is Jason Burek of Wall Street from Main Street, and this is your Wall Street from Main Street interview for today, Friday, April 22nd, 2011. Today's special guest is Chris Marchese. Chris is hedge fund manager at Quintillion Capital, and he also writes under the pen name Hyperinflation for Seeking Alpha, and he's written in the past for Financial Sense as well. How are you doing today, Chris?
Pretty good. How are you doing?
Pretty good, Chris, except for the lousy weather here outside of DC. It's like 40 degrees and pouring. So, other than that, I'm good. Silver's up, even though, the American markets are closed. We have nice activity. Looks like out of Asia, silver is still moving higher.
Yep.
Okay, Chris, so let's dive in here to some questions I wanted to ask you. You're really good with the COT, Chris. So I was wondering your opinion on last week's COT when it came out for the April 12th, week of April 12th. It looks like, the shorts covered a lot.
Yeah, I mean they covered I think it was around 5,000 contracts, which is pretty large for 1 week. I have a feeling that when the next COT report comes out, which will be Monday due to the today being a holiday, um, it'll probably show a further reduction in their net short position just because they got to be losing tons of money
Yeah, they're
keeping this trade on.
Yeah, Chris, they're definitely losing tons of money here, and I think the word's out. We're definitely in phase two here of silver for sure. There's people that think we might be in phase three. I don't think we're in phase three. Silver is not at a new nominal high even yet. We're not even over 50, and the mining shares are lagging. So, so what I wanted to also ask you about, Chris, is your opinion of this hedge fund spread trade that a lot of the people in the gold and silver community, everyone who's an expert in gold and silver is invested in bullion and also invested in mining shares. And our mining shares have gone up a lot the last couple of years, but the last few months it seems to me that the silver shares and definitely the gold shares have underperformed bullion. So if you could just talk about maybe the spread trade a little bit for some of our listeners.
Well, I think a lot of the managers out there don't really understand the gold and silver market in general, and they think prices are elevated. I know one manager made a $1 million bet just buying puts on silver recently. So I think they're just not convinced that these prices are they're viable long term, and so they would naturally short the mining shares. And another there's a bunch of reasons. A lot of pension funds, mutual funds, etc. can't buy companies without paying dividends. That don't pay dividends. I don't know. It's just there's just not a lot of knowledge in this area because it's been a we haven't had a commodity bull market, prior to 2000 for 20 years before that.
Yeah, I completely agree with you, Chris. There's still a lot of Wall Street professionals, and I see this on Seeking Alpha all the time, and I'm sure, you dealt with this in your comment section on your articles. People are, quoting the PE ratio to you about like valuations or discounted cash flow model on all your mining stocks, and you and me know how to value mining stocks. That's not really how you do it for the most part. You value them on the market cap and some of the other metrics that are unique to the sector. And these guys are, trying to apply like vanilla valuations basically to stuff, and they're getting it wrong. Like I've seen it in Molycorp and some of the other, commodity stocks. But these guys are not familiar that these are, separate asset class. That it's asset-based investing. That you need to know how to value the asset first and foremost, and they're not doing that. So I think that's what one of the main problems is here, is that these guys just don't understand what they need to do to value these things, and they're going to learn the hard way. But I guess that's good news for people like you and me, Chris. So
Yeah, I also think it's a there's a huge disconnect between the economics world and the finance world. So I mean, a lot of money managers and whatnot they don't understand real economics. They're used to, this Keynesian nonsense that's been going on the last, I don't know, most of the century. Just, um, you know, the boom bust cycle. But this time, they've really put the currency in grave danger. Even, Bill Gross of PIMCO is saying, a 0% interest rates, just it's a recipe for disaster.
That's exactly right, Chris. I think a lot of these guys on Wall Street, still see gold and silver, as a commodity. They don't see what the market is, really doing, that these are being remonetized. That gold and silver, they're now starting to get their monetary premiums. The market is not trusting, the paper fiat currencies, the treasury bonds that are backed, by the full faith and credit of the United States or other, governments that are just basically printing money and handing it out to their large corporate friends, special interests, etc. So
Yeah, it's amazing that people don't realize that these metals are a store of value. 100 years ago, 1 ounce of gold would buy you a really nice suit. Today, it'll do the same thing. And I think since 1913, the purchasing power of the U.S. dollar, I think $1 has a purchasing power of 2 or 3 cents. So it's just people just don't get the story.
uh, people don't get it, Chris, because like you mentioned before, I don't. They're not really taught that in schools. Whether you want to say they're intentionally not taught that in schools is debatable. But most of the generations, people don't last. From there's not many people around from 1913, Chris. To talk about the Fed, or not even many people are left, Chris, from the Great Depression in 1929. There's not that many people around who remember some of the stuff, some of the games that were played, with the revaluing the gold higher, confiscating the gold. So, if more people remembered, if this stuff was mentioned in textbooks, then, this we'd be more prepared. So I think that's why, some of these developing countries like in Argentina, where, the government's stating the inflation rate's only 10% now, but I've heard the inflation rate in Argentina is like 28% or something like that. I mean, these guys are used to being lied to.
Oh yeah, it's just the inherent nature of government, you know, to paint a much rosier picture than there actually is. Paint, a picture of this false prosperity like we've been living through the last decade. And, it's individuals' responsibility to go back and learn about history. Because if you rely strictly on what you're taught in school and by the mainstream media, you know, you're not going to do well.
I completely agree, Chris. I'm a history major. I graduated college with a degree in history from Virginia Tech as one of my degrees, also a political science degree. And I had to unlearn a lot of the history I was taught. I studied multiple American history courses. It was like one of my concentrations. And I had to unlearn a lot of the stuff I was taught. We didn't learn, financial history really that much. We studied the Great Depression, but it was mostly, New Deal programs and how FDR saved us and how, Hoover was an evil free market guy, which you and I both know from Dr. Thomas Woods that and studying that was, not the case. And it's just really amazing, some of the revisionist history in some of the textbooks. Um, and a lot of that, goes to the Fed. I mean, the Fed has been, paying for economists, to write paid research grants and write papers on this and this and this for financial history. So the Fed has rewritten a lot of financial history, even, in the Fed's own summary. So Chris, you're really good with the macro. I want to ask you some questions here about the Fed, what the Fed's doing now, and about QE2 extension and the QE3 program, and what do you think the likelihood is of a QE3 program, or do you think the Fed doesn't even need it? Do you think that they can get away with just, a QE 2.5 or a QE2 extension?
Well, this is a pretty complicated question, but so I think they're supposed to buy another 100 billion this month. They need to keep buying to keep the interest rate low. That's going to be that's unsustainable for going to do it for that much longer. But what I think is going to happen is they're going to start getting principal payments on the mortgage-backed securities they own. They are going to get they're going to receive interest payments on the debt that they own, which is essentially paying themselves money. So they can reinvest those into buying more government paper to keep the interest rate low without officially announcing a QE3. And but I think that in the end it'll probably be a combination of them doing that and announcing possibly like a smaller QE package. Um, and I know Obama's up for re-election in 2012, and historically when a president runs for re-election, it's understood that the central bank will have a very loose monetary policy to try to spur a short-term boom. So when voters go to the poll, they think, oh, things aren't that bad, but that's just a temporary. It's just papering over the problem for a very short period of time. And my guess is that's likely to happen again. So I don't see the printing press is really stopping anytime soon.
Those are some good points, Chris. I agree with you on a lot of that. I just don't see who's going to buy the treasuries, Chris. You have the Fed now who owns more treasuries than China and Japan. Japan, it's not like Japan, can buy the treasuries now. Japan's got problems of its own after the earthquake, tsunami, and the nuclear accident. I'm not sure they can buy any more treasuries. They might have to, sell treasuries to bring money back, for their recovery. So this is all. Hmm?
They should sell all their treasuries to pay for this. This is why they have these reserves in the first place. So yeah, I agree. Japan, if they start buying treasuries, I don't know what's going on in the world.
If Japan is buying treasuries, do you think the Fed is like secretly, printing money and handing it to them to buy treasuries, like, kind of what the Fed did in 2008, where the Fed gave out, it's just revealed that the Fed gave out, trillions of dollars to foreign central banks, foreign investment banks, and stuff like that, even to the Libya, South Korea, all those central banks.
Well, I mean, I don't think they'll have to do that because they'll have. I mean, my estimates are somewhere around 500 plus billion to reinvest every year, mostly because of the principal payments on the mortgage-backed securities. So, you know, they might be able to get away with it for a year, just keep buying their own securities instead, essentially, just reinvesting the money to monetize more debt, print more money, etc.
Okay, but
But
okay, but
we'll see.
the Fed is running, not the Fed, but the U.S. government is running budget deficits here, of way over $1 trillion. So even if the Fed only buys like 5 or 600 billion worth of treasuries, where do you think the difference is going to be made up? Because those treasuries have to be sold, right, just to keep the lights on here, the U.S. government for the government agencies and stuff like that. Do you think it's going to be China or someone else that steps in? How do you think the difference is going to be covered?
Uh, I mean, China increased their treasury holdings last quarter from the previous quarter, but I don't really see them doing that to any material degree going forward. Uh, the eurozone's in complete disarray. Hopefully, South America is too smart to do that. Japan should be selling theirs. They need the money to rebuild. They should not be printing more of their own currency, debasing their own currency when they have these reserves. So, it's going to be a really interesting time coming up because, there's a lot of ways they could take this. Yeah, and you're right. They do have to pay for these deficits, and hopefully the average investor and foreigners won't be suckered in to keep buying these. These are junk. These bonds are junk. So I don't know why they're rated AAA still, but
They're rated AAA because S&P, Moody's, Fitch, those main
oh,
guys. It's like a
I
government protected oligopoly or whatever. If you've ever read the book called The Big Short by Michael Lewis, he explains how the rating agencies were so worried about downgrading them. And the same thing's going on, because these guys basically have a government sponsored oligopoly and they're worried about, competition and stuff like that. Um, also you mentioned off before we started recording here that the Fed is also planning on buying tips now, and I also just heard someone did some very good investigative journalism on the internet. I found out earlier this week, that the Fed's selling puts now on U.S. Treasuries to also keep interest rates down. That's like AIG selling credit default swaps on subprime, isn't it?
yeah, yeah, that's exactly what it is. And I think um, them saying that they'll buy tips is actually they must be concerned about some inflation, which they claim is well under control. Because if they own tips, they'll get they'll be compensated for the inflation premium, and they'll be able to monetize even more debt with the extra income. So that's just seems like a pretty fishy to me.
Yeah, definitely, Chris. But I mean, when has the Fed not been fishy? And we got these press conferences now. I think Bernanke's supposed to have a press conference next week, his first like major press conference or whatever. Now that they're going to do one a quarter, so who knows? The propaganda and some of the other nonsense that's going to come out of there. A lot of spin truth. The Fed is so political. They claim to be independent. We both know they're not. It's just ridiculous.
Well, I mean, the president appoints the Fed chairman. There's a conflict of interest right there. I mean, but the average person doesn't even know what the Fed is, what they do, what their mandates are. You know, the destructive policies they've enacted. Over the last century in the U.S. So they might not get that much scrutiny.
That's it. That's exactly, Chris. And then, people like you and me that talk out about the Fed, we're labeled, we're on the watch list or whatever. They put our names, they flag us for being, right wing conspiracy theorists or whatever. And, we look at all the facts. I mean, how many facts do people want? You and me could overwhelm people, with lots of the facts. But people like even Bill Fleckenstein. I was listening to a Bill Fleckenstein interview like last week, right? And he was talking about the CPI on Fox Business and how food and energy prices are removed, right? And how the BLS fudges, the well more than fudges, like they completely lie about the inflation numbers. And the Fox Business people were calling, Bill Fleckenstein black helicopter, and he's like, no, this is a fact. Look at the numbers. And how much evidence do you want here? So
Well, you got gas prices, you got oil prices going up, you got gold prices, silver prices, uh, base metal prices, you got the whole agriculture complex. Uh, just going shopping, grocery shopping's becoming unaffordable. I mean, it doesn't take a genius to see what's happening.
yeah, exactly, Chris. And you're starting to see inflation creep into the system, like up the value chain, up to the U.S. consumer, where maybe we didn't see that necessarily as much before, months ago or a year ago or something. We're definitely starting to see that now. I'm noticing, at some of my favorite restaurants, at a P.F. Chang's, at a Maggiano's. These are large, high quality, Italian or Chinese chain restaurants. That are all around the country, and the portion sizes at these places have been cut in half. So they have new menus, their portion sizes are like cut in half, and the price is the same. So these guys are, substituting. The restaurateurs are substituting. They're trying to do what they can to make the people think that things haven't changed that much. But people are starting to notice. I hear a lot of other people, that I'm friends with talk about this now. And it just means, lowered standard of living for people here in the United States unless they're investing in inflation hedges.
Yeah, exactly. And this is going to be the biggest transfer of wealth, you know, in the history of the world. What's going to take place over the next 5+ years, and it's really sad that people aren't aware of this. So you know they don't they don't really know who to blame, what exactly, like how the Fed works. I don't know. It's just you know the best you can do is just tell people to buy real assets,
Well,
sell bonds, don't keep just keep cash for your everyday living expenses. I mean, I don't think the severity of the potential severity, you know, of all this currency debasement is recognized yet. So
exactly, Chris. From an investment standpoint, that's what people need to do. But for people to feel comfortable holding these investments, because they're not something that the mainstream, financial services community endorses, people need to be educated first. So maybe it's showing them a 5-minute YouTube video or something like that, or buying them a copy of a couple documentaries on DVD, like one of them from the Mises Institute, Money Banking, Federal Reserve, or any of those other good documentaries that do a good job of that. The people, I think, for people to understand that they need to invest in this stuff, they need to be educated first. Otherwise they're going to panic because the mainstream media, the herd, is going to tell them what you're doing is wrong. So, and they're not going to question. These guys don't have a great track record in the mainstream. A lot of these guys, and most people don't, call them out on it. But I wanted to transition here. You mentioned the wealth transfer, and a lot of the transfer, a lot of the purchasing power, some of it's being spent by the governments and the Wall Street banks and the large banks that are getting the money first. But the creditor nations are where the wealth is really being transferred to, Chris. Their purchasing power is increasing. You're seeing the wealth transfer from the West, which is, debt burden here in Western Europe and the United States and the UK. You're seeing that, transfer of wealth to like basically Asia.
well, yeah, because I mean they invest in they have a lot of capital formation. They can invest in productive assets. All the U.S. does is borrow and spend, borrow and spend. Everyone's living on credit. It's insane. I mean, I was just screwing around on J.P. Morgan's website, and you can get $100,000 loan without even talking to someone. It's, I mean, we haven't changed our ways. Um, the same things that caused the crisis in 2008 are still going on. We're just headed towards a complete collapse.
That's a good point, Chris. And when we interviewed David Morgan, not in his interview yesterday, but in his previous interview that we did with him, he talked about, he thinks that there's only maybe 3 years left for this financial system because, of how dishonest it is, how it's so short-sighted. There's not, like good long-term honest capitalists here who are making, who care about their companies, don't want to risk bankruptcy risk for their companies, want to make smart, prudent, long-term investments, and generate productivity and wealth for the world. So we're not seeing a good, honest system, and that starts with the money.
Yeah, he's right. I mean, the Fed's manipulating these interest rates, which distorts where entrepreneurs should allocate capital most efficiently. So, I mean, and the ones that do realize this, I mean, like take for instance, Jim Rogers moved to Singapore. I mean, no good entrepreneurs are going to want to stay here. This is just reminiscent of Britain 100 years ago. They were on the decline. The U.S., you know, was on their way up, and now it's Asia on their way up, and the Western world on the decline.
Yeah, Chris, and there's not an incentivized, tax structure here in the US either, where corporations, want to repatriate their money and invest it, in factory jobs here in the US, or, creating more jobs for Americans. I just don't see it. I don't see, China has a lot better tax policy, for entrepreneurs. I think if you go and try to start a business there, if you're a foreigner, you don't pay taxes, or you pay a very low tax, for the first 3 years while you're building your business up. So this is the type of thing that we need here in the US again. That one of the reasons why my grandparents and great grandparents came over here was because it was easier for them to start a business in this country, and taxes were low, and they could build things and grow it. And that was the original American dream, not owning your own house.
Yeah. Well, what they need to do is just stop spending so much money. That's the real problem. They won't need to tax, you know, people up the rear if they're not spending money for this and that. I don't know, all these Social Security, Medicare, Medicaid, we're already in the red. We can't afford these things. They need to be cut. It's going to hurt, but it'll be better for overall.
Ex-
And the people gotta realize this.
Well, I don't think that people realize this, Chris, because I think, they believe the phony budget numbers and some of the other stuff, like, how Obama's saying, oh, we're going to save, X amount of money over the next, decade. We're going to save $4 trillion over the next decade or something like that, and the money we just chopped off. But, it's really not going to save any money because that's only on the face. And the people say, oh, we're saving money. Okay, fine, back to normal. But the problem is, the system, the whole system itself is everyone's, voted themselves stuff. We have over what 40 million Americans on food stamps. The real unemployment rate, is over 20%. If you count like underemployed, people have stopped looking for jobs, or people who are trained who receive multiple degrees in something, and are working like $7 jobs at McDonald's or Starbucks or something. So we, like you said, we have a complete misallocation of capital, and that starts with the Fed. So
Yeah, we become a welfare state. Everyone thinks they're entitled to everything. It's just absurd, and we have a pure socialist president, just augmenting this, you know, pro union, pro this, pro that. When he doesn't understand the consequences of all these things, it's hopefully he doesn't get reelected. Hopefully the dollar's still in, hasn't collapsed by the time someone who knows what they're doing can come in. Otherwise, if Obama gets reelected, I don't see the dollar surviving, past his second term.
yeah, I would agree with that, Chris. I think I think this dollar, unless they, replace it with a new paper fiat money system and try to scam the majority of the people, I think this dollar system has at most like 3 or 4 years left, and maybe not even that. We'll have to see, what type of tax programs or other, QE programs the Fed tries going forward here, and if, foreign creditors allow it, if they fund it, or if the velocity picks up, because if Americans holding dollars decide en masse that they don't want to hold the dollars, that'll be the velocity for hyperinflation, wouldn't it? So
Yeah, the fiat money has never worked. Going back to the Yuan dynasty in the 1300s, it fails and fails, and it's just history is repeating itself once again. Knowledge is lost in every generation, especially when you have a socialist. You're being taught these socialist doctrines in school because they need to be government accredited. It's just the whole thing's a mess.
yeah, I completely agree, Chris. And they're not even really listening to the Austrian school argument. And the Austrian school, researching this on my own, I had to learn all the Austrian school stuff online and find the sources there. And I looked up the Austrian school's track record, and it's just amazing. And it surprises me that people don't want to listen. That people in the mainstream and the economics profession don't want to listen. So my, let's move on to the next topic. We could talk about this for a long while. I really wanted to ask you about China. So we're hearing this stuff, from Jim Chanos. Chanos picks his battles here. He spends a lot of time researching things on the short side, and he makes very big concentrated bets. And Chanos has bet a lot, on the China housing bubble collapse. But I was wondering what you think about that, how you think that affects commodity prices, and do you think like the central bankers printing money, do you think that'll cancel that out? Like in terms of a Chinese like real estate bubble collapse? Or do you think that the inflation is going to trump it because, China is going to decide, well, we have a humongous amount of trade surplus coming in, and it's smarter for us to hold copper, a humongous amount of copper in a warehouse than hold X amount of dollars.
Well, I think I don't think a big real estate bubble is going to burst. Soon, maybe in a few years. And I think it's going to be big, maybe something similar to the Great Depression, severity wise. Hopefully, they'll take the right steps. You know, tighten up monetary policy, let interest rates um, float to the free market rate, and they'll be out of it, relatively quickly. But yeah, I can definitely see that happening. Um, but on the other hand, they've also their currency strengthening. No one really knows, you know, how much the purchasing power would increase should they decide to just let it float against all other currencies. That can negate some of it, but yeah, I agree. I think most of the emerging markets are Brazil, Argentina, China, India. There's a lot of inflation going on, and when you get inflation, there's a lot of misallocations of capital, which will cause a boom and a corresponding bust. But hopefully they take the right steps should that happen. I mean, they've been tightening the reserve requirements at banks, but it's so menial that that's not going to really prevent anything at this point. They need to really tighten things up. But they're in a lot better shape than the Western world. So
Yeah, I agree, Chris. I think what they really need to do is, revalue the RMB, like you said. And, China this isn't really on credit. Their real estate bubble's not really on credit. It's just that there's, so much paper money floating around there because of the dollar peg, I guess, and the capital controls, because a Chinese investor has very limited investment options, that a lot of it's going into real estate. But these guys are not taking out loans for the real estate. What these guys are doing on the real estate, I think it's like 50% now down payment, in cash minimum
well,
for to buy real estate in China.
yeah, I mean, we'll see. I mean, they take out loans. They're just they take out credit. It's just not to the degree that we we do it, but it's going to have a negative. It's going to be systemic if there is a bubble bursting. On the other, but they've been buying a lot of hard assets, which is really good. I think one thing they could do to weather the storm, which I don't know, looks unlikely by their recent actions, is start dumping or reducing their U.S. Treasury holdings. I mean, they have over $1 trillion, and that would greatly benefit them if they can either get out of them or the majority of them in the next year or two. So
Okay, and also, Chris, like I asked about the commodity prices. I was wondering what you think this would do, to iron ore price, copper price. I don't know if this would, hurt the oil price really that much, but I was wondering what you thought it would do, to maybe some of the industrial commodities, because, just in the last month, I read that the housing prices in Beijing have dropped. Some of them have dropped as much as 27% already. So maybe you're already starting to see a correction, but if they, even on this drop, copper prices really haven't dropped that much. I think yesterday it was $4.40 a pound still.
well, I mean, they've been raising interest rates, and housing prices are inversely correlated with interest rates. So, I mean, it's right that they've corrected. I mean, maybe not to this degree, but you also have to take into account the rest of the world. Japan's going to need a boatload of everything. Base metals, iron ore. You know, to rebuild, they need to spend a lot of money. So, I mean, I don't think commodity prices should really be that affected.
And you think then that, like, it would just be a good opportunity then to continue to like add to positions or start new positions then maybe on dips.
Yeah, yeah, definitely. And yeah, um, wherever you can find a good deal out there, like uranium is just ridiculous. People are reacting completely illogically, given China's not going to change switch going to nuclear just because of what happened in Japan.
Yeah, exactly, Chris. I think they'll just, increase the safety standards of the plants that they're building, or, maybe they switch to thorium, nuclear reactors, but then, thorium cannot fizzle on its own without, uranium or plutonium, so that's going to get used anyway. And, the megaton to megawatts program is just about over. That's a supply overhang. So I agree with you. I really like uranium as a long-term contrarian investment. Maybe the stocks aren't going to rise for the next 6 to 12 months. But if an investor builds up a position over that time, he's going to do very well in the next 3 to 5 years because there's just not that much high grade uranium left, and once it's used up, it's done, and that's it. Especially on a thorium reactor, there where they throw the used uranium in. So I think uranium's a good contrarian investment, like you said, and I still see value in natural gas. But someone has to be patient though. They can't expect their stock to double or triple or quadruple or something like that in natural gas in a short amount of time. It's just not going to happen. But there's not a lot of capital flowing into natural gas projects. There's some in the shale, but they're starting to look at the environmental concerns with the shale, with the water, if it's destroying the water or not. And there's a lot of debate there, but the facts that I've looked at, it looks like the water is clearly being destroyed by the way they hydraulic fracture and use dynamite in the shaft there on the horizontal drilling. So I think the natural gas price, uranium and natural gas, we all have to have energy. So I think you're right on there with the contrarian investments.
Well, I mean, natural gas it's not going lower, so you might as well initiate a position if you don't have one. Um, it it's gonna be a it's gonna have a lot of uses going forward once they can um, you know put it in the right form. For example, like if they can make a natural gas car that didn't blow up if it crashed. There'll be a lot of things like that. And like what you just said with the shale, I mean, if there's a lot of environmentalists getting involved, that's just going to push the price higher. You can't store a lot of natural gas at once. Um, and, yeah, I mean, that looks to be one of the cheaper energy plays out there right now.
Yeah, I think natural gas is like by far, the ultimate contrarian play because, a couple years ago, I think in 2008, it crashed from like over 16. They were doing all the shale plays and then it crashed down to 2 and now it's, a little bit at 4. and it's going to slowly creep up. But people like who are committed to this for X amount of years and build up positions, they're going to do very well for themselves in natural gas because the oil to natural gas ratio is at historically high percent there. It's kind of what the gold to
Oh
it's
yeah,
kind of like what
yeah,
the gold to silver ratio was when silver was at 100 to 1 gold. It's like duh, you got to buy the silver, right? So
yeah.
and you just back when that was the ratio for silver to gold, you just kept accumulating silver. So this,
Yeah, speaking of, yeah, gold should be doing really well too. I'm really surprised that it's only at 1,500 right now, with all the things going on in the world. Inflation, you know, reported inflation, which is heavily manipulated, is creeping up around the world. It makes me think that this might sound like a conspiracy theory, but central banks might be shorting these so it doesn't undermine paper money. I mean, if gold went to 5,000, that would definitely undermine the U.S. dollar.
well, the U.S. dollar is gonna fundamentally undermine itself, Chris. Like, especially because you and me both agreed. We talked about the dollar here earlier, but the question is, what's going to be the next world's reserve currency? Are we going to have a basket of currencies? Is there going to be gold in the basket? Are people going to demand, asset-backed money with gold or something else? So that's something people need to pay attention to over the next few years because right now it looks like the dollar is going to be death by 1,000 cuts. And David Morgan gave this analogy about the dollar, and he said basically it's like the butterfly effect now. It's getting to the point where a butterfly flaps its wings, and that could be it for the dollar. One little event could trigger something, and that could be it.
Yeah, it can happen overnight, which makes it all the more scary. But you gotta investors gotta do what they can to preserve their wealth. And the hard assets, agriculture, energy. I still think, despite silver, I think last time we talked, silver was around 30. It's up 50 over 50%, and I still think that's where you want to be.
Yeah, Chris, especially because the silver miners, when we run the valuations on some of them, they're not even really even pricing in $30 an ounce silver yet on some of them. So
Oh, definitely. I mean, I was looking at uh, Silver Wheaton, which for people that don't own that company, they should definitely take a look into it, and if they like what they see, initiate a position here. Um, I haven't seen it trade below the price of silver in quite some time. So, and they got the best management team out there. They actually, believe in their product.
and no government, no large corporation waste, no large bureaucracy. They don't have 600 vice presidents like a Ford or a General Motors or something like that at large salaries. There's like 15, 20 guys at the company. This is one of the most efficient business models people will ever see.
Yeah, all the royalty models are just they're brilliant at this juncture, given their fixed costs structure. Silver Wheaton pays $4 an ounce for silver. Franco Nevada for their streams pays 400. Sandstorm pays anywhere from 350 to 500. So I mean, their margins are. I think those are going to be the go-to companies. Even though you'll find a lot of miners that will outperform them. These are going to be just free cash flow machines. They're going to pay out huge dividends. I mean, look at Franco Nevada last quarter. They increased their dividend 60%.
Wow.
So
And plus, Chris, with those companies, whereas with a regular miner, a lot of these regular miners, some of them only have one or two, projects, and there's a lot of extra political risk there, with like what just happened in Bolivia. and you buy like a Franco Nevada or a Silver Wheaton, Silver Wheaton has silver streams all over the globe that are in production already, that are delivering. So, you're well diversified in the one company there. So that's what I really like about the business model. It's efficient, cash flows fast. They reinvest their profits quickly or return them to shareholders, and then they're really well geographically diversified. You're not going to have a Bolivia incident where the stock loses the next day like 20 or 30%. So I think like you're definitely right. People should those are core portfolio material first, probably for most people, before they start picking out regular mining companies.
Yeah, one I want to point out is the sister company to Sandstorm Gold, Sandstorm Metals and Energy. They've already um, agreed to. They've already made contracts with 6 coal streams and 2 oil streams, and this is the first. You know, Nolan Watson, brought this over to something other commodities other than gold, silver, palladium, and platinum. So investors should take a look into that company. They're going to be buying oil for $15 a barrel. I mean, the valuations just they're absurd, and you got Nolan Watson, who's just a brilliant manager managing both these companies. So hopefully they get more attention. I know people don't like buying on the pink sheets if they can't buy in Canada. So hopefully they get U.S. listings soon.
Yeah, I think Nolan will definitely uplist Sandstorm Gold soon, Chris. I don't know that much about Sandstorm Metals and Energy. I know you've studied the company a lot more than me. Do you offhand know the stock symbol for Sandstorm Metals and Energy and what the stock's trading at? And maybe if you could give people like what your net asset valuation is for Sandstorm Metals and Energy, maybe to show how stupidly mispriced or gross mispriced the stock is.
It's SND.V. That's the ticker. I don't know the pink sheet ticker. Um, their net asset value, I actually haven't calculated that yet, but just based on a cash flow basis, using $120 oil and the same what coal's trading at, using the same ratios, it's going to have about 60 million in pre-tax cash flows, and it's only at $250 million company. So, I mean, it's already very cheap with the assets they have, and they have, a decent amount of cash on their books, and they'll be getting cash flow in the middle of the year already. So,
And are
they should be able to grow fast.
And are they looking at expanding into other types of energy too, Chris, like natural gas or uranium? Are they looking to diversify like their energy portfolio?
Yeah, they're looking at uranium. They're looking at base metals. They're looking at iron ore. They're looking at copper. All those. And if I were them, I would look at buy uranium and natural gas here. Try to make deals with those.
Yeah, because they can buy those for cheap right now, Chris, and finance maybe a producer to go into production next year or something like that when the price bounces back. That's definitely a good idea. Hey, maybe you'll be running one of these companies or on the board of directors one of these companies one of these days.
Yeah, that'd be nice.
Okay, well, to wrap things up here, Chris, well, thank you for your time. And if people want to see your work, where are they going to find it? And then I also want to promote the treasure hunting for precious metal stock report, and we're going to be out with a new version hopefully next week.
Well, I haven't really been writing. I've been pretty busy with work and everything, so I haven't really been writing that many articles. I've done a few for David Morgan in his newsletter, and I'm working on another one at the moment. So, and if you want to find out about our company, just feel free to email me at Marchese, Marchese.chris@gmail.com. And I'll give you all the information, what we offer, etc. But yeah, that's how I've been, spending my time lately.
Yeah, Chris, I'm speaking for, a lot of other people that I've been talking to, people are very familiar with your work or, I started learning about gold and silver stocks, reading your work on Seeking Alpha like 3 or 4 years ago. Before I bought any shares, I was reading your articles, learning, trying to educate myself first. And we miss your writing there, but I miss your COT updates. So if you want to just like write the COT articles, I think that was very helpful there because I think you do a better job of it. You do a good job, of summarizing things very succinctly. I enjoyed reading those on a financial sense.
Yeah, I'll probably get back to that. This the last 4 months have been crazy. Silver has just been going up in a straight line. Uh, Trying to grow a little bit. Just, so I'll be back at Financial Sense, I think. Seeking Alpha, um, here and there, I'll write an article, but I'd rather spend the time just improving the treasure hunting report, coming out with more frequent updates, things like that.
That's good news for me and Mo, Chris, because we definitely value having you on our team there with the treasure hunting for precious metal stocks report. And as we develop, our main website, the Wall Street for Main Street website, we're hoping, to do more with the treasure hunting report brand and build it into a franchise.
Yeah, I mean, everyone I know that's read it has liked it, so hopefully get the word out there.
Yeah, and I've been spending, a pretty good amount of time working on some of the companies and articles too, helping you and Mo out on top of that. So, now that I'm done with my Dragon Metals report work for a little while until I decide if I'm going to write another version of that in the future. So, thank you very much, Chris, for your time, and definitely have you back on here, hopefully in the near future, when silver and gold are a lot higher.
All right, thanks for having me.